Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Dryden Gold, an exploration company focused on the discovery of high-grade gold mineralization. We're going to be talking Basel III. We're going to be talking gold revaluation. We're going to be talking the Fed seemingly abandoning their 2% inflation target. And of course, we're going to discuss the latest developments with Dryden Gold. It's Trey Wasser. Great to have you back on the show.
Hey, Jesse.
So last time you were on the show was about a month ago, and we discussed Basel III and its potential implications for the gold price, along with the Genius Act and how it could shape economic policy in the U.S. I know you're following both of these factors closely. Do you have any new insights to share with us?
Really, not too much. As far as Basel III, I think the most interesting thing that I have not seen any evidence yet of any of the U.S. or other banks actually announcing that they are purchasing gold as a tier one asset as a part of their reserves that they are forced to hold under the banking laws. But I have seen a lot more interest coming out of institutional investors who, the large scale institutional investors and sovereign funds and that type of thing that follow Basel III as a guideline for their portfolio holdings and development. In other words, they have a risk asset classes and their lowest risk. A lot of institutional investors do use Basel III. So, we're starting to see some interest on the gold side from institutional investors now that typically looked at it as much more as a speculative investment, and now we're looking at it as a long-term holding.
And when it comes to the Genius Act, before we hit record today, you were talking about how all of this stablecoin adoption and the level that crypto has gotten to now that it's being regulated in the US is starting to bring some of the crypto crowd into the gold space. Walk us through that.
Well, you're seeing more and more of these gold-backed stable coins, and I have never been a big crypto investor, just a small amount of Bitcoin and Ethereum in my portfolio. Um, but since this stablecoin and doing the research around the different stablecoins and some of the trading that's starting to go on beyond stablecoins in the DeFi market, I think very important that J.P. Morgan, who Jamie Dimon, of course, one of the biggest haters of crypto over the years, J.P. Morgan just did their first very large trade on the blockchain using a DeFi protocol in the treasury market. And for them, it is a logical next step. They can trade it much more easily. The fees are much lower. The settlements are much easier, and they can trade it 24/7. So in doing the work there, what I found is how intricate that market is and how sophisticated really some of these long-term crypto protocol investors and developers really are in what they're putting together. I quite frankly still don't understand it, and you wouldn't know how to invest in it. But I think the fact that now that we're starting to see more and more crypto-backed stable coins and even some deposit type of crypto DeFi exchanges with gold backing. And some of these are offering, it's attracting that crypto crowd in that normally, would not be looking at to be a gold investor, but the idea of being able to trade a crypto backed currency or a stable coin and an action that within the intricacies of these exchanges could actually generate some yield on their gold holding. I mean, there's even one crypto back or gold-backed crypto Genesis now, or Kinesis, I'm sorry, Kinesis it is, that it is actually paying if you use it for transactions. So they're paying it in gold. They're paying um, it, a fee, a cashback fee, if you will, like a credit card. So just very interesting, and I think just one more way that the gold market is, again, for all of us who really believe gold is the ultimate currency and the only real money, that all of these things are just attracting a bigger and bigger crowd to the gold market.
Yeah, I completely agree with that. I know a lot of the viewers of this show are very staunch gold bugs. The you don't own it, you don't hold it, you don't own it type of mentality, which I ascribe to. But you have to get into the mindset of these young people who are entering the market in their 20s, who have basically been exposed to crypto first before anything else. And so that's what they know more than anything else. And the fact that we are now seeing gold backed crypto and potentially attracting this new area of the market is a very positive thing for the gold market overall. I do want to talk about the question of gold revaluation. This has been a hot topic lately. The Fed recently releasing a paper discussing other countries who have revalued part or all of their gold reserves and the implications of that. This has led many to speculate that the Fed is considering such a move. I've had such a range of opinions on this show regarding gold revaluation, from it will never happen to it must happen, and literally everywhere in the middle. It's actually interesting how varied everybody is being with this. What are your thoughts? Is it realistic for the US to revalue their gold reserves? What would it actually accomplish? What would its implications be?
Well, that's what I have a hard time with. To me, it would seem to be just a balance sheet item. Would it make the Fed's balance sheet look stronger? Yes. That's They don't own enough gold to balance out the 30. I don't know what is it today, 38 trillion in debt. So, it might help some. Make the balance sheet look a little better. But I don't. To me, it doesn't look like it has any ramifications beyond that. And it certainly, makes sense. I don't know that it has to happen, but it wouldn't surprise me if it did, because an asset that's being valued at, are they valuing it at $35 or something an ounce?
$42, yeah.
42, is that what it is? Then yeah, to revalue that. Of course, the other thing too is that they'd have to probably prove that it's all there, which that's
Yeah.
that's a whole different topic that a lot of people. So I don't know. To me, it's just a balance sheet. It's an accounting function, and I think it doesn't really change the dynamics of the fiat currencies or the U.S. debt situation.
Yeah, if they were to mark the gold to market, it would be such a grain in the sand, a grain of sand in the hourglass of debt that they're drowning in, and they'd have to revalue it to 20,000, 30,000, which it doesn't make a lot of practical sense once you start doing crazy stuff like that. But who knows? I mean, we'll see. This administration has been anything if not unpredictable. The latest Fed meeting in Wyoming has come and gone. It looks like they are abandoning their 2% inflation target without actually stating that directly. As we know, Fed speak tends to obfuscate everything. Here's what Fed Chair Jerome Powell had to say. With policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. So it looks like the Fed is going to cut rates up ahead. That's everybody's expectation, despite inflation being above their 2% target, according to their own basically fake metrics, and obviously massively above 2% for people who live in the real world and have to feed and clothe themselves and pay rent, a world to which the central bankers seem to be completely unfamiliar. What are your thoughts, and how do you think this could affect the gold market? Could a rate cut up ahead be kind of the fuel that leads to this next leg up?
Well, look, I think that, and of course, here we also have some breaking news, right? With this Lisa Cook, one of the
Yes.
Fed governors there, that Trump is threatening or has fired, and for some type of mortgage malfeasance. but which would maybe change the balance of power there. But it looks like that the I mean we have all known that they've been basically lying about employment numbers for quite a while. I mean, you see it with the adjustments that are being done on a monthly basis and an annual basis, that there's been really no or little employment growth. But at the same time, just when it looks like the economy is about to fall off a cliff, those industrial production and other numbers come back. So I think the economy still is considering is weakening. This predicting a recession, but I think that with the resurgence we're seeing in inflation, and I think we've bottomed, and so that if the Fed starts cutting rates and the economy is slowing down, then we're going to be in a period of stagflation, which is basically the ideal environment for holding gold.
Let's talk about the mining sector, continuing to massively outperform the broad market year to date. The GDX and GDXJ ETFs both up over 70% so far this year, completely destroying the broad market and obviously greatly outperforming the metal itself. It feels like we're really off to the races. This feels like that type of moment, the start of an epic bull run in the miners. What are your thoughts? How do you view this recent price action?
Well, I mean, basically, I felt it's been pretty predictable. Ever since gold really broke out above 2,500 here. So the last couple of years has been a great time to be a miner. Their input costs, while affected by inflation and gone up on some levels, their biggest inflation or their biggest input cost being energy has actually softened for them. So it's been a kind of a perfect storm. And you really have these companies doing something very different, and it's across the board that we typically, when gold price would go up and you would see the companies starting to do dumb things. They certainly wouldn't be watching their costs. They start mining lower quality assets, and cost of their overall sustaining costs would go up, and capital costs and all in sustaining costs. They do stupid acquisitions and overpay, dramatically huge premiums for things. And we're just really not seeing that. We're seeing most of the companies focused on, of course, Agnico and Alamos, just really good, the correct jurisdictions, the right kind of organic growth, and really watching everything as far as cost. But even the bigger companies, and I won't, Barrick's starting to perform a bit better here. They had to get through this thing of losing their Mali mine, but Newmont's a very good example. I mean, Newmont is instead of doing, after the Newcrest acquisition, they went through a period here of selling off some non-key assets, focusing some capital costs here the last couple of years, really, since the Newcrest acquisition, on really improving their 10 or so tier one mines that they're going to be focused on, and now announced, that they're going to be doing a lot of layoffs. So, it's really it's really encouraging to see the gold companies, acting like real companies in such a good gold environment. And I mean, they're basically, the profits that they're showing, and they're doing a good job of debt reduction across the board. Some are starting to pay better dividends, and I think that will, if prices stay up here or go higher, they're going to be forced to even pay bigger dividends. But I'm always impressed with Agnico Eagle, because when they talk in their quarterly reports, they don't refer to their shareholders as shareholders. They refer to them as our owners. And that's I think a of course they probably carry the best multiple and probably a lot for those kind of reasons. But I'm just very encouraged, and if you're bullish on gold and you think it could go to 4,000, I mean these companies, you know, Newmont for example, I mean their cost is 1,500 all in sustaining costs, and they are their number one goal now is getting those costs down in a rising gold market. These are good companies to own.
Yeah, absolutely agree with you. I want to shift over to Dryden Gold right now and start with a post you made on LinkedIn where you said Dryden Gold has hit visible gold in 3 brand new targets, each a kilometer apart. The kicker, they're backed by structural breakthroughs that help us predict high-grade zones like never before. Walk us through these new targets and how you are able to predict high-grade zones.
It's very interesting. So first of all, remember that Dryden Gold has a huge property package. It's all contiguous. It's all, most of it stretches along the major deformation zone there. That would it'd be like owning 70 kilometers of strike on the Porcupine-Dester Fault in Timmins. Most companies, they're happy if they can own a few kilometers, even a kilometer along the Porcupine-Dester Fault. And we're focused in one area where a lot of the historic work was done. We call it Gold Rock. And, it's where there was historic mining in the early 1900s. And all of that mining was really done on 3 major vein structures or mineralized structures there, the Big Master 1 and Big Master 2, which are quartz veins with halo, and the Elora structure, which is more of a shear zone and a little bit wider. So as we've gotten the permits this year and allowed us to really expand to the north on Elora, we've now, opened up a kilometer of strike there from the Jubilee zone at the south where we were drilling last year off the patented claims. And then, now I've been able to move to the north, a kilometer north to the Laurentian, which was the highest producing mine in the camp. We've just continued to find, more of these high grade zones. And most importantly, what we're finding is these stacked structures or hanging walls. I mean, typically, from my, not being a geologist is, you typically will have a hanging wall and footwall structure around a vein. But in this camp, very much like Red Lake, we're seeing these multiple hanging wall structures next to Jubilee, next to Laurentian. And these stacked structures are adding to the width. In other words, we started out with the main Laurentian shear zone there running anywhere from 4 to 12 meters, which is a nice size for a high grade gold that starts at surface. But now that we're adding these stack structures, which are very close, I mean, some of them are just a few meters away, some of them, maybe 50, 60 meters away. And each one of these is showing high grade gold. So we announced one of these hanging wall structures that this was earlier this year, had 300 grams per ton over 3.9 meters. When we stepped out to drill that deeper, we hit another hanging wall structure because, of course, we moved further away from the structure to drill deeper. And then when we stepped out again, we hit another one. So we've hit 4 of these structures now that are parallel structures to the Elora. And we saw indications of that last year, but over at Big Master. But we thought it was just an isolated hanging wall, footwall structures to the veins over there. What we're starting to believe now is that there's probably a lot more of these stack structures over there. So what we did, and this will be kind of upcoming news, is we stepped all the way across this it's about a 500 meter distance between Big Master and Elora, and drilled what we call a gap hold all the way across to see how many of these structures we might find. Because we were finding them one at a time as we stepped away from Elora. Now we just went all the way over to Big Master and drilled all the way through. So that this will be exciting, to see what we hit here and exactly what's going on there. But all of a sudden, this area, which again, this is near surface high grade gold, and it's expanding not only along strike for a kilometer, but now all of these stack structures, which are adding up to each one of those is 4 to 10 meters thick, and it's really adding up to volume in this one area. Now, keep in mind that also, we'll be quickly, the next place we're going to move the drill rig is up to Mud Lake, which is 2 kilometers to the north of where we're drilling of the Gold Rock area. And we think we have a very similar target up there. Has no drilling to speak of, a little bit of historic mining, but we've mapped it out and tested it, and it seems to have all the same characteristics and structures as the Gold Rock area. And then in the pipeline, around the Gold Rock we have one more target to the north, another kilometer north, and then to the south we've got 5 or 6 more. So, we think we'll continue to drill at Gold Rock and show because it just keeps growing. I mean, we have more and more targets every time we hit one of these these stacked structures. But then we'll also show that we've got quite a few of these potential targets that look just like this.
That's fantastic. And you guys are always advancing your projects. You're always putting the drill bit to work. Every time I speak with you, something new has occurred that is exciting with the company. So that's fantastic. I do want to talk about the infrastructure you have in place, which includes major highway access and logging roads with grid power. Break all of that down for us.
Interestingly, I just got back from there. We did a site visit with the whole board here a couple weeks ago. So to give you an idea of where this is in the world, me being from the United States, I actually flew to Minneapolis and then took a small a regional plane up to International Falls, which is right on the border of Canada in Minnesota. And then it's only about a 2.5-hour drive to Dryden on a paved highway the entire way. So that access to the north-south, and then of course east-west, the property, the Trans-Canada Highway runs from Thunder Bay to Winnipeg, and that's what goes right through Dryden. So that goes through the northern part of our property. And then the access, whether it's we went to out to the Gold Rock area, and there's quite a few logging roads in there that have given us access. They've opened that up quite a bit, not as much as some of the areas, but there's been that paper mill in Dryden for the last 20 years, and because the highways, it's so close to the highways, these areas have gotten a lot of more than their share of logging activity, which opens up, they clear out the dense forest there, and also put in the roads for us. So it's been great. And when we went down to over to Hinman, which is a regional project, a property and target, and down to Sheridan, literally you could drive a Volkswagen Beetle in there on these roads are so good, and then get out and walk on the structures. I mean, you can see where we drilled at Sheridan, you drive along the road and you can see the drill pad right off the road. The structure actually runs right through the road, and the same out at Hinman. So incredible access, and the team has done such a good job. I mean, a year ago we took possession of a property out there under a lease, and it was an old golf course that we've developed into our core shack and cutting facilities, and so we're doing everything ourselves now. We broke ground while I was there on a second core shack. We have the office there where the old clubhouse was for the golf course, and it's just a beautiful piece of property. So it's a nice place to be and work for everybody. So, we really are building a great team out there. It's a very young team, but they're very motivated. A lot of them are, they're not tied down anywhere. So, our exploration manager and one of our newest geologists are actually moving to Dryden, relocating their young families and really making a big career move with us. So it's very exciting, to have the facilities there and be able to do this. And we get compared a lot to companies that have been out there for 4, 5, 6 years working on their properties. And of course, we've been public just a little over a year and a half. And of course, a lot of those other companies also are dealing with recycled projects. So their infrastructure is already there. Somebody built that for them, and it's a property that somebody else explored and built the infrastructure. We didn't have that, so we've kind of had to start from scratch. But I think I don't know if we also, of course, we just closed a $7.8 million financing.
Yeah, I wanted to talk about that next. Yeah, you closed a recent equity financing with participation from Centerra Gold. So yeah, walk us through the details of that and how you plan to put that capital to work.
Well, we had some of our major shareholders come to us and say, look, let's, the stock had a nice run earlier in the year, and it settled back a little bit, and said, look, let's look at doing a financing now, even though we haven't spent. We've still got about 3,000 meters to drill and about 3,000 meters in the lab or at the core shack being logged from our fully funded budget for this year. So we still have money from that, and yet we've put this money in the bank, which will keep us drilling for a fall drill program, continued drilling, and well into 2026. So it was total $7.8 million. Sprott Asset Management came in for a nice piece. Several other Dundee and some of the Dundee people personally, and our major shareholder Delbrook was the anchor, the lead order on that, and so it's nice. We'll be going to Beaver Creek here in week after next, and it'd be nice for the first time going to Beaver Creek and not having our hand out. But if you look at the potential here, we have all of these catalysts. I mean, we've got channel sampling at Hinman. We've got the drilling that's going on both along strike and in these stack structures at Gold Rock. We've put in a few first pass holes at Sheridan, which are in the lab, and have, like I said, 6,000 meters of drilling, either to finish or to finish drilling is about 3,000 meters of the 15,000 meter program, and then about 3,000 of that still to report. So a lot of drilling news to come out. This gap hole I talked about, we're very excited. I think we'll have that out next week before Beaver Creek, and I think that's the one where that hole should wake the market up to really what we're dealing with as far as these stack structures, and because we'll be able to show them all in one hole, where we've been kind of showing them one at a time, and I think this will have a much more impact as to what's going on. And then of course, I mean, it'll probably be next year, middle of next year, before we need to raise more money. So anybody who likes the story is pretty much going to have to buy it in the open market.
Trey, this has been a fantastic conversation as always. I love talking about the gold market and Dryden with you. I'm going to put a link in the description below to the Dryden Gold website as well as social media profile for people who want to follow along with the company. Thank you once again, Trey, for coming on and sharing your knowledge with the audience.
All right. Thanks, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.